Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and we're getting an update today from Erik Wetterling, also known as the Hedgeless Horseman. And we'll put a link to the Hedgeless Horseman website down below so you can follow along with Erik's work and analysis. And Erik, great to have you on the show as always, just to dive into the junior mining resource sector, looking at a couple of stocks that have news out to kick off the week. First one that we were talking about off mic was Juggernaut. Juggernaut has a property in the Golden Triangle, the Midas property. They put out their first drill hole of the season, and it looks like VMS type target, a lot of massive sulphide kind of metals in there. They put out some photos. What do you make of the news from Juggernaut?
Yeah, I actually had higher hopes for Bingor. That was the main course for me this field season. But, I'm happy to be surprised if their VMS targets over at Midas turn out to be the actual main course of this season. With that said, it's not like I expect this to be a whopper of a hole. They have 2 meters of semi-massive sulfides. They have attached a slide where you can kind of compare at least 1 meter of zoomed-in core relative to a chip sample that they found, and that graded, pretty good, almost 10 grams per ton gold, 177 grams per ton AG, 1.58% copper, 1.77% zinc. So I think there's a pretty good chance that at least, 1-2 meters might have pretty good grades. So it's like the main takeaway, obviously you don't make a deposit with one hole, but I see it as an encouraging sign that, hey, when this field season is over and they've drilled their meterage here at Midas, maybe we'll be really excited.
Well, and I wanted to ask you about companies that put out press releases where they put photos out and things like that. I think a lot of people misunderstand the goals of the company. They're not trying to just be flashy. Yes, they're using it for marketing, but they're trying to tell people what the mineralization they see in there. Like they're seeing the pyrite, which is a good precious metals indicator, chalcopyrite for copper, sphalerite for zinc. So they're basically saying we found VMS style mineralization, the sulphide mineralization, and these are the kind of pathfinder minerals we want to see. What do you make of it when companies put out press releases where, they're showing the photos, they're showing the drill hole? Do you like seeing that as an investor?
Yeah, I don't have a problem with it. Where one could get into trouble, let's say, is that, you hear sulfides and you hear 84.5 meters, and then you just assume that's like, oh, that means it's going to be a 84.5 meter zone of, economic mineralizations. So that's where retail investors, let's say, could make a mistake, just assuming that just because there's mineralization, that doesn't mean it's economic mineralization. But otherwise, it's like I'm fine. If anything that, brings more knowledge about a target or a project, I'm all for that, because at least there's, more factors to consider, for example. Maybe this suggests that it's a robust system, let's say, because there's an alteration halo of, 84.5 meters. I'm just making up an example here, but it's like, as long as the information is accurate, I have no problem with it, because sometimes I actually find some news releases where it's like, it's very skimp in terms of information. So it's like, you can't really twist and turn that much. So if you like due diligence, like me, I prefer to actually get to learn as much as I possibly can, because maybe down the line, this kind of, these visuals will be very important. I don't know. Just the fact that, okay, they show a chip sample and they have the grades for that, then one can at least try to infer, try to front run the results. I can speculate on what the grade could be and, make up the expectations. And of course, I don't think it's almost ever bad if expectations are in line, let's say. Sure, you won't have that shock revaluation, but at least it's maybe keeping the stock from getting too volatile if we can kind of see what the assays might be. So then it won't be this huge disappointment, and maybe not the huge shock to the upside as well, though. But it's like, yeah, I don't have a problem with it.
Yeah, it's going to be interesting to see, obviously, when the assays come back, how much of that is actually mineralized with economic material, but encouraging and nice to see the right pathfinder minerals in there. And they've got, it seems like, 15 holes planned for this program. So we'll keep following along as more results come in. Maybe we'll reach out to Dan, get him on the show, and have him give us an update. So thanks for bringing that to our attention, Erik. Another company that had news out that we do have on the show, and I know Corey will be speaking with him later this week, and that is District Metals, traded on the TSXV under the ticker DMX. They put out some information on their base metals Tomtebo property, and I'd like to get your thoughts on it.
Yeah, I mean, I am a big fan of their DMS properties in Bergslagen. I know this area pretty well, and I know what a cash cow the Garpenberg mine is for Boliden, which is the partner that's funding their exploration right now. So when we look at the actual news release, obviously I would have liked them to hit on the aggressive step-out holes, but at least they showed that the Steffenburgs Zone continues at depth, and they had a very, very impressive hit, 29.25 meters at 7.36% zinc equivalent. So I don't know what people are used to in terms of grades, because I think there's always this phenomena where Canadian gold projects, for example, tend to be the benchmark. It's like, oh, you know, because I look at a lot of resource estimates in Canada, and usually they have like 3, sometimes 4 grams per ton cutoff grades. Whereas like this part of Sweden, for example, you can have very low operating costs. I mean, you can check the Garpenberg cutoff grades, and they are quite low. I mean, I think I looked it up, I mean, today, and got the numbers to around, the lowest cutoff grade was like, what was it, 270 SEK, I think, which is less than $27, and up to 650 SEK or something, and just the in situ value of the hit they had here at almost 30 meters is like $325. So this should be, if this was mine, this should be wildly economic here in Bergslagen. So I mean, it's not a company maker, it's not a barn burner in the sense that it shows that the Steffenburgs Zone is like much bigger than we thought before. It's not a huge step out down dip, but at least, I mean, it's showing that there's some very thick and very economic grades down there. And hopefully what happens is that it turns out to be a, you know, Garpenberg lookalike, because most of the vast majority of the Garpenberg deposits, they're found, you know, a few hundred meters at depth. So literally they're just still scratching the surface over at Tomtebo. But we can't forget either that if Boliden earns in, this will not be 100% owned by District Metals. But with that said, Boliden also ventured into the JV, a property that's even more de-risked with a, you know, larger historic research and all that. So the pie is much larger, but our specific stake as District Metals shareholders of the Tomtebo property has been lowered quite a bit. So yeah, I would say it's not a company maker or anything like that, but I do like to see that with uranium being the main course in District Metals, and I assume that's what 95% of people have bought District Metals for over the last year or something. So I don't think a lot of people cares about this, but as a value investor, I have no problem seeing that the potential margin of safety, let's say, is at least creeping up, because we don't know for sure that they're going to lift the moratorium. And one day, even if they lift it, or especially if they lift it, I think there might be a situation where they spin out the base metals project. So, I mean, you would want as much meat on the bones on that spin out as possible. Or let's put it like this. Increasing the value of Tomtebo might not show up now, but it might be quite important down the line.
Yeah, Eric, I think that's a great point. I was going to ask you that because it seems like the focus for most investors is the uranium story and the potential that they lift the moratorium in Sweden. But people forget that District started as a base metal story. They have a lot of, you know, zinc and lead and silver, and Boliden is a major powerhouse in the base metals producing. They're producing nearby. And like to your point, if they keep hitting at depth and show that maybe the system keeps growing at depth, I think at the end of the option agreement, they maybe only have 15% that District would own, but you'd have a major carrying you through that, and you have all that value underpinning the value in case the uranium story doesn't work out. There's no guarantee the uranium story is going to work out anyways. There's still a lot of unknowns. So when you see a company like this that maybe has two commodities, or maybe they have resources in place, or, you know, there's different things that underpin value, but then the light is being shined on a different project. Do you like having that as a safety net or as kind of a plan B?
Oh, absolutely. I mean, from a risk-reward perspective, I think it can totally change the whole picture, because, like, imagine if Boliden and District keeps drilling these VMS deposits, these base metals, and they keep proving it up, and the market might not care. Sure, you don't see it showing up in like added value again at face value, but it's like at the end of the day, maybe, it's worth more than the current market cap, and all of a sudden it goes south with uranium. As you said, I expect it to go in a positive direction, but just in case. And it's like, it's not like the whole asset base got taken away from you. There is margin of safety underneath there, and maybe you're going to have a company maker down the line on just the base metals, for example. So it's like, I think it's absolutely great, and especially for value investors. And also I would say that it's quite important to kind of know when it might, or see what might monetize, or how success could get monetized, for example, because there's a lot of juniors out there with like 5 projects. They're working one, it's typically discounted, and you get all the other projects for free, which I think is the case with District Metals, for example. But in this case, you have a major player, as you say, de-risking this, and they're not stupid, obviously. They need big mines in order for it to be worth their time. So, I mean, a monetization event could be, again, that they spin this out and it's actually worth quite a bit. Maybe the spin out will, be worth someday much more than the current market cap of District Metals is. And also in the case that the uranium story goes south, that's like, no, they don't lift the ban. And at face value, all the uranium properties are all of a sudden worthless for the foreseeable future. I mean, it's not like it's going to go to 5 million or something. It's like totally destroyed. Sure, there's a lot of people that are probably going to sell in the short term, the uranium players, but longer term, it's not like all the value went away. And all of a sudden, in that case, even though it's like not directly monetization, at least the underlying base metal value will have some consequence, let's say.
Yeah, it makes sense. And it's nice to see both projects, the uranium side of things and the base metal side, moving forward for District Metals. Nice to see Boliden involved and that they're hitting at depth, and we'll just keep seeing how the results come in, not just on this Steffenburgs Zone, but some of the other projects they've ended in that you mentioned. So going to be interesting to see the base metal side of District Metals move forward along with the uranium side moving forward at the same time. Another company that put out some news on Friday is Lion One. Lion One trade on the TSXV under the ticker LIO, and on the Australian Stock Exchange LLO. But Lion One is an interesting story here in that they have clearly a fantastic gold alkaline deposit in Fiji, and they've made the decision to go into mining about a year ago. Last August is when they started. We're almost in August now, Erik, so a year later, they've had some speed bumps along the way where they've had to keep doing financings, and the news they put out on Friday was closing yet another financing, and they even put a sidecar financing in with it. So I think they raised over $11.6 million. What do you make of where Lion One is as far as the stage they are at as a company, trying to get in production? Looks like they didn't have enough sustaining capital to get them through the last couple periods. So now they're up and producing, but is this going to be enough? Is there going to be more financings? Is this the end of it? How are you looking at it, Erik?
Yeah, I mean, I think Line 1 is a very interesting case. I mean, this is basically, we say, it's a high risk, high reward sector. Most of the time, there's no, let's say, immediate severe risk in the sense that, I mean, it's hard to kill exploration projects typically. Yes, if a junior has, one target, they can afford to drill 5 holes. If they miss, it's like there's nothing more to it. Yes, that stock would sell off quite handily, but a lot of juniors is like, even though the share price might go down 80%, whatever, there's still, potential left. So there's, typically you can live to fight another day. With these development plays, obviously it's more, real in the sense that this is when, rubber is meeting the road. There is no, I mean, if this goes really bad, let's say, given that they have debt and all of that, I mean, you can kind of figure out what the worst case scenario is. The worst case scenario is not that you miss a drill hole and the stock drops 50%. The worst case is even worse. It's like, potential bankruptcy, for example. So that's the tricky thing with these. And especially if you're not a mining engineer, which I am not. So it's like even harder to kind of figure out how is this going to look in 6 months, 12 months, whatever. So that's the obvious risk. And it's like, could be pretty final in case it really goes south. But at the same time, it's like, okay, we saw the financing. We know they've been ramping up the throughput. We saw what really stuck out to me, and is why it's like I've actually added some here, is that the CEO, Walter Burakoff, he put in $500,000. So the way I look at it is like, I don't think it's his check that's the difference between the production story not working out or working out. That is not like, oh, he has to put in $500,000 just to, save the company, basically. That doesn't look probable to me. So I take it as a pretty good sign that it's like, hey, he might think this is actually quite a good deal. But with that said, of course, nobody knows the exact future. I think that when they would hit the 500 zone, for example, they should very much be printing money. You can do some rough calculations. Like if their ramp up goes somewhat according to plan, and they get to 500 tons per day and they go into the 500 zone, I mean, that could be some really good quarters. The thing is, of course, that they need to get there. They need to stay afloat until at least they get there. So I don't know. I think it's one of those cases where it's like, for me, I don't have a huge position simply because it's very real risk and it's imminent as well. Of course, the upside is that if this is enough for it to work, or maybe they do another financing, I don't know. But at the end of the day, the upside is, of course, that this becomes a free cash flowing mine. They get into the 500 zone. They, produce a lot of cash. They go out and explore, and they find, 1, 2, 3, 4 more Tuvato type loads, or it continues at depth, etc. So it's like, as always, it's Schrodinger's cat. So I would just say that it's like, it's not like I'm going all in just because Wally put in 500K, but I take that as a pretty good sign. And yeah, so that's the risk reward as I see. But in this case, I don't know what the exact probabilities are of, it not working out or working out. I wish I knew, but yeah, in the meantime, I'm, nibbling a bit, and, we'll have to evaluate as we learn more.
Yeah, Eric, I think you said it well as far as Wally buying. There's a lot of reasons where company executives have to sell. It could be personal issues, divorce, homes, all kinds of stuff, taxes. But there's only one reason to buy, because you think it's undervalued and you think it's going to go up. So it is a good signal. And I guess I should disclose I'm a shareholder of Line 1 as well. And what had me attracted about it the last couple of years is it's a big alkaline system. There's clearly high-grade gold there. They've got some big feeder systems. We've had Quentin on the show, and he's talked about the geology before. But they also have a 7-kilometer caldera, a volcanic caldera to explore, and they've only really explored a tiny piece of it in a few regional targets. The idea was to get some small-scale mining going like this to actually generate revenues, not keep doing financings, but actually generate revenues to actually feed the exploration beast. And so I was looking at a press release they put out about a month ago, this updating people on production up to June, and they were showing that they finally poured, I think, 1,600 plus ounces in June. Before that, they had gotten just barely over the 1,000-ounce mark in May, but prior to that, they started mining in August. All the way through this, they've been sub 800, sometimes 400 or 500 ounces a month, which is not very much to write home about. Now that they're up to the 1,600, 1,700 an ounce a month, you could see them on a pathway to, let's say, 3,000 to 5,000 ounces a quarter and growing it. Do you think that there is still upside in this for the exploration side if they can get escape velocity on the mining? Are you looking at this as more of a producing story, or are you in this for the exploration side? Because usually you're in the drill plays.
Yeah, I mean, that's the thing with this I was going to say. It's like it doesn't really matter what the exploration story is if they don't make the production side work. And we saw that in how the stock traded, that when it was more of a pure exploration story still, it reacted a lot to drill holes, to good assay results. When they started talking about we're going to, go into development, all of a sudden it's like the market reacted less and less to the actual exploration results. And that makes a lot of sense. I mean, if you're going into production, it's almost, I was going to say, meaningless how much potential there is, because if you would go belly up and not even be able to drill the potential, then again, the potential could be enormous or nothing. It still doesn't matter because, the company went belly up. So I look at it as all the focus now being on the development, because it has to be. Again, it doesn't matter what the exploration potential really is. But at the same time, if they make this work, then all of a sudden this is going to be at least a hybrid play where it's like, oh, it's a producer, you get something for that. Oh, you show that there's more potential, you get something for that. And maybe it's like we know, or most people know about the K92 story. Started with small production, and then they made big discoveries, as you told me off mic. So, I mean, that's the blue sky case, basically, that they make this work and then it becomes grow in terms of exploration and grow in terms of production. And there could be, 5 really good years ahead. But now, of course, we have to get through that gate to becoming free cash flow. And then everything else then can get unlocked.
Yeah, good point, Erik. So we'll keep following along with Line 1 to see if they can keep the mining rate high enough to get some revenues coming in. At least we have a higher gold price backdrop for them to produce into. And then hopefully that gives Line 1 enough revenues coming in to be able to press the drill bits and really get exploring on their land package. But thank you for coming on, Erik, and sharing with us some updates on all 3 companies, Juggernaut, District Metals, and Lion 1. And if people like following Erik's work, definitely click on the link below. This takes you over to the Hedgeless Horseman website, where he's often writing up companies, posting videos that he makes on the markets, how he's looking at the sector, and keeping you abreast of the latest news. And Erik, thanks for coming on the KE Report. Looking forward to our next conversation.
Thanks, Chad. And as always, consider me biased.